Welcome back. JSE-listed specialist logistics real estate investment trust Equites released their annual results for the period ended February 2025. The company owns logistics properties which they rent out to high-quality tenants in the commercial space. The company says its gross revenue rose by over 71% to just over 4.2 billion rand, and that it would be paying to shareholders a distribution or a dividend per share of 133.92 cents a share, up just over 2% on the year prior. They've also indicated that the properties that they lease out have a weighted average lease expiry term of about 14 years. And they noted that in their rationalization process, they disposed of 2.4 billion rand worth of assets. Well, to take us behind the numbers, I'm joined by Andrea Taverna-Turisan. He's the CEO at Equites Property Fund. Thank you so much, Andrea, for joining us. So very briefly, for context for the viewers, give us a picture of the type of logistics properties you rent out and to what kind of tenants across what sectors.
Okay, so I mean, the type of products that we rent out obviously are from fairly substantial ones. I mean, for your Joburg living people on the R21, if you were to drive along, we've got some like 95,000 square meter facility let out to ShopRite. We've got another one in Quebec in Wells Estate. And then we also have in Canelands, we've got one there as well to ShopRite. We've got two substantial warehouses with TFG in Johannesburg, one in an area called Lord's View, another one also on the R21 in Riverfields. If you're driving along that Riverfields area, you'll see a massive DSV facility, which is 146,000 square meters.
All right.
So pretty substantial warehouses let to, on long leases to blue chip covenants, effectively.
Understood. We get the picture. So because of time, I just want to get straight into the nuts and bolts. So it's been a good year in terms of revenue growth. What do you attribute to that? Because it was quite a substantial leap, 71% or so.
Well, I mean, the growth really is linked to the fact that we got good like-for-like distribution, rental growth in South Africa, but we also got some very good rent reviews in the UK. And the consequence of the two has resulted in revenue obviously growing nicely, and obviously expenses being where they are. But we foresee everything sort of stabilizing now into a more sustainable sort of 6 to 7% sort of growth year on year. The UK is going to be a challenge, and one of the reasons why we are looking to sell the assets there, we feel that the growth that was coming through those assets has been achieved, and now potentially is a really good time to capture that growth and then redeploy it in schemes in South Africa, which potentially can show us better growth in the medium term.
Yeah, so that nicely leads to my next question. So you sold off some of your assets. What was the rationale behind that, and where are you applying the funds that you raised from the same sale?
Yeah, I mean, we rationalized for two reasons. Firstly, I think it was always needed. We had some assets in the portfolio that had been there for a while, and whilst they were very good assets, they wouldn't be assets that we were prepared to invest even more money into and to make them ESG compliant. So it gave us an opportunity to sell these assets when they still had good tenancies in them. And you can see from the pricing that we achieved across the board that we did extremely well out of those sales. And we've redeployed that capital effectively into the development of these brand new state-of-the-art ESG compliant facilities that will be the backbone of our portfolio for the next 25 years. And then also what we were able to do was also to pay down some debt. You'll see that we paid down about 11% of our debt. And obviously we're in a much more balance sheet friendly position to take advantage of the opportunities that are coming our way and continue to come our way in South Africa in the coming months and years.
Yeah, just linking nicely to what you were talking about ESG, I see that you signed some 6 power purchase agreements which are expected to be generating revenue by financial year 26. Just tell us a bit more about those and the benefits that you expect to accrue to the business.
So obviously what the reason we went there, when we first started putting solar panels on the roofs of our warehouses, was really to afford our tenants energy security effectively. So that was the rationale. Obviously, as legislation has changed and we were able to up the ante in terms of how much energy we could put on the roof of our warehouses, we've then entered a different realm of actually trying to become an energy producer. We were part of the pilot program here in Cape Town, where we sold energy to the building that we in as a head office in Cape Town. And over and above that, you know, the agreements that you mentioned are direct agreements with the tenant that's actually physically in the building in which it's being generated in. What we do have is we have an additional 750,000 square meters, which is a lot of roof space that we can put more panels on, with a view to looking to sell that to third parties, not necessarily the tenants in our buildings. And that is what our team is actively engaged in and looking to do in the future. So the revenue stream going into financial year 26, I think, will be the first time that it will have a decent impact, and hopefully thereafter it will only get sort of bigger and better, if you like.
Yeah. Very quickly, Andrea, what is your view of the South African economy in, you know, looking forward, and therefore how it's going to impact your business?
Listen, I mean, we were very optimistic on the back of the GNU. I think I've sat in a few various sort of conferences and get-togethers with other CEOs in different industries, and the general mood was positive as a consequence of that. We hope that the benefits of that GNU continue to sort of feed through into the system. You know, that being said, you know, there's still 60 million people in South Africa, a lot of them that are looking for jobs and need to be sustained. And ultimately, the route to the future is efficiency. And ultimately, you see organizations like ShopRite and TFG spending an incredible amount of money to bring that efficiency to their business. And ultimately, it becomes worthless if their suppliers are not spending an equal or commensurate amount to improve their supply chains. Otherwise, there's going to be a bottleneck somewhere. So you can imagine the fact that the retailers have spent this kind of money and they're putting themselves in a position of strength, the pressures that they'll be putting on their suppliers to improve their supply chain so that they can meet the demands, and the efficiency and the cost rationalizations that come out of running a very efficient operation.
Yeah. Andrea, thank you very much for having joined us, spoken to us. That was Andrea Taverna-Turisan. He's the CEO at Equites Property Fund.